what's the way forward for Indian markets? Let's discuss that with two distinguished gentlemen, Sudeep Bandyopadhyay and Deepak Moni. Sudeep, Deepak, gentlemen, good evening. Welcome to the show. Thank you for joining us. Deepak, if 5,000 was gone last week, today bulls have barely managed to defend that mark of 4,900. In the overall scheme of things, if markets go below 4,900, is that dangerous?
Well, it's just a continuation of really what's been happening for the last few weeks. So nothing significant at 4,900 as such, except it being a nice round number. This is a downtrend now that's been on for about 5-6 weeks. I mean, with each fall, you could say we are that much closer to the bottom, but how much longer this lasts is a little hard to predict.
Sleep, just getting from bad to worse.
I completely agree with you, Nikunj. I think, inflation number, what came today was completely unexpected. We all were expecting slightly better number, and on the back of that, hopes were being built that RBI will probably be courageous enough to come ahead and cut rates once again, which can probably cheer the domestic markets. But unfortunately, none of that happened. Inflation number came as a shocker, and that kind of spooked the market, because very clearly with these kind of inflation number, RBI will be very reluctant to take any rate action. On the other hand, Europe, as you also mentioned, moves from bad to worse. Situation is Greece is worsening, and there is now serious threat of Greece pulling out of euro or getting moved out of the euro, which probably will lead to all kind of speculation regarding the survival of the European Union and euro as a currency. Very unfortunate, but that threat looms large now.
Okay, some other stories we are tracking for you. JSW Steel came out with a disappointing set of numbers for the quarter gone by. Sales were up 40%, but profit has taken a knock of about 3%. Adani Power plunged to a new all-time low after company reported a loss as against a profit. So the green arrows are missing, red arrows are back for some of these power companies. And then IVR Steel Infra, PAT is down 92%. Now some of these asset owners, builders, constructors, machinery companies, they are getting hit hard. There is a margin squeeze, top line is looking sluggish, and in the near term, the investment cycle is just not kick-starting. Sudeep, more than global macro, today was about individual stocks, and one is getting a sense that markets are now worried about corporate earnings.
Very correct, Nikunj. In fact, most of these corporates which you mentioned about have reported really disastrous numbers. Not only the numbers for the quarter, but overall outlook for these companies also are looking very, very bleak with the way things are. Unless and until there are solid action on the policy front and on all around by the government of India, central government, state government, really there is very little hope as far as these infrastructure sector companies, power companies, machinery manufacturer, capital good companies. So yes, things are really, really looking bleak, and the market sentiments are reflecting that only.
Let's look at energy stocks. Reliance touched a new 52-week low today. GAIL India corrected by about 12% plus on strong volumes, and then ONGC also took a hit of about 1%. That makes it 251. Deepak, let's look at energy stocks and how are they looking technically?
Well, if you take a Reliance, which you had just mentioned, coming close to its one-year low or just below it now, ONGC, all of these are at least multi-week lows or worse, but they are all fairly slow stocks, so you don't get Reliance falling like, say, an IVRCL or... So in a sense, they remain defensive even though they are in a downtrend, simply because they won't cause as much damage to a portfolio. But they're obviously not very good for trading in either direction. They don't fall very sharply, but they do decline. Nor are they at the moment very good for holding in a portfolio. But if you have them, I think the downside risk is not so bad as is potentially there in other stocks.
But the stock of the day really was India's largest construction company, L&T. First came the disappointment, then came the surprise. The disappointment was that for FY12, which is for the financial year gone by, L&T has missed their order book guidance. But markets breathed a sigh of relief. The minute management indicated that they are confident of maintaining a 12 to 15% growth in their order book for FY13. So if you look at the intraday graph, first it was a crack, then stability, and then some kind of recovery. So the question we are asking on this edition of Markets Tomorrow is that what does L&T's FY13 guidance indicate? Sudeep?
Well, it's a very, very encouraging guidance, and it clearly indicates that the management is confident. I would like to take it with a pinch of salt. The performance for FY12, considering the constraints the company is facing, has been remarkable. 20% plus profit growth, excellent sales growth is very commendable. But order guidance, they have missed this quarter, and I'm not very sure how far they will achieve the overall guidance under the current circumstances unless things change. But yes, overall performance has been commendable. We can only hope and pray that they maintain the momentum and the economy recovers.
Deepak, L&T on the charts, do you think that stock has now hit a bottom?
Potentially, yes. It has finished at a 5-day high on a day that most stocks are weak. And if you compare it with, say, BHEL, which has gone below its December low, this looks a lot better. Its December low is 950. It's 200 rupees, more than 200 rupees above that. So there is potentially a higher intermediate bottom forming here, which could in the long run, I mean the very long run, spell out a reversal in the stock, the long-term downtrend in the stock. Nothing confirmed yet, but let's say that today's move, and in fact the move the last 1 week, suggests that some kind of bottom fishing happening here. Today the volumes were also huge, 4 times the average volume of the last 2 weeks. So given all that, there is certainly interest in L&T. Now it's just a question of would the selling reappear as it goes up. That's the only hurdle in the way.
Movement in rupee. Rupee of late has been the biggest irritant for money managers who invest in India. Unitech and Pantaloon, they both are due to declare numbers. Even though Unitech and Pantaloon are not important numbers when it comes to the Sensex and the Nifty, but for overall market health, these are high beta stocks. EU Finance Minister, the meeting will start in Brussels tomorrow. This is for the first time France and Germany are meeting after the French elections. And then US retail sales. Bear in mind that almost everything in US when it comes to retail space is at an all-time high. So tomorrow night for us and Wednesday morning for us, markets would react to US retail sales. But the pack which I want to address with our experts is classic, defensives, and then pharma stocks. Sudeep, I guess I might sound like a broken record, but that's the story so far, classic, defensives, and pharma.
No, I completely agree with you, Nikunj. This story is getting played world over. Value stock picking, value investing is not in fashion yet. Very clearly it implies that markets and investors are expecting the market to come down even further. That's why people are not interested in value buying. People are interested in growth investing. So in spite of the fact that these stocks are at a considerably high valuation, people are expecting they to go up further. So they are buying growth, they are investing in growth. So very clearly pharma, FMCG, these are the sectors world over we are seeing traction.
Deepak, to your mind, which is the strongest pharma stock and which is the strongest consumer stock?
Pharma, well, after that move Divi's Labs has made today 7% up. That probably takes the top spot of the moves in the last 2-3 weeks, or maybe even a month or so. Other stocks that have made pretty good moves lately are Wockhardt, Glenmark. So these are not really your traditional solid defensive pharma stocks. Those would be really normally Dr. Reddy's or Sun Pharma, which are not doing that much. Lupin's another stock gaining a little bit of momentum. So pharma not really going up while these stocks are going down. That's what I would say here at the moment. The FMCGs, Asian Paints, I think is the runaway leader here. Good strong move. Levers woke up a little bit today, up to a 5-6 day high. So there is demand in this sector, more than pharma actually at the moment.
Bajaj Auto and Infosys Technologies. Infosys of late seems to be outperforming and Bajaj Auto of late seems to be underperforming. That's Bajaj Auto for you, which today closed at 1586, did manage to recover from the day's low. Bear in mind that Bajaj Auto still derives about 33% of its total revenue from exports. So a weak rupee may not benefit Hero Honda as much as it will benefit Bajaj Auto, because Hero Honda has also a huge liability when it comes to royalty payoff, and that always happens. That always happens on dollar as a base. Let's look at Infosys Technologies. Infosys Technologies in last 2 or 3 days has managed to hit a bottom. Most of the market men are of the view that at these levels Infosys could be a great contra buy. Sudeep, would you agree with my assessment?
Well, if you're really long term and you believe in the management, yes, you can do that. But I will rather wait for some more time before starting to buy Infosys. My bet in IT sector, as far as large caps are concerned, I will still continue to believe in TCS. I think if you have to buy something today in IT, do buy TCS.
Deepak, what are your thoughts on Infosys? Do you think in the near term Infosys has hit a technical base, a technical bottom?
Not necessarily. It got that huge crack on the 13th of April. It really plunged down after the quarterly results, even took TCS down with it. Now, if you look what's happened since then, it came back up to about 2,500. It's receded from that, has had one or two bounces. So by no means is this decline confirmed to be over. TCS, on the other hand, doing a lot better.
Deepak, how do you propose traders should approach high momentum stocks? When I say high momentum, JP, GMR, GVK, do you think traders, they should position themselves for a trade which is looking obvious, which is that these stocks could retest December lows?
Well, they're getting down there pretty sharply, even though they had gone up so much between December and March that falling down to those December lows would be considered an achievement, but they do seem to be trying very hard to get there. So I would say that at the moment the sales would be on the short side. These stocks are very unlikely to go up while the market is falling. So I think wait for a Sensex bottom and then start thinking about these stocks.
So Deep, at the time when global risk off clearly is at play and global liquidity is moving out of India, as a thumb rule, should traders and money managers avoid stocks which are largely dominated by foreign institutional investors because they do run the risk of selling?
Yeah, it's an interesting point, Nikunj, but if you really look at it, the money FIIs had put in were in large caps, by and large. Of course, they were in mid caps also. And large cap, they have invested significantly in FMCG and pharma also. Our belief is that you will get decent returns if you selectively buy good large cap and good large cap pharma and FMCG stocks. So I really don't think you can avoid that. But yes, if you see a particular company has a large concentration of a particular FII, and if you can figure out their strategy a bit, then you can take a calculated call. But by and large, you need to stick to FMCG and pharma, large cap.
Deepak, outside the index, what are you hot on?
Well, outside the index, Divi's Lab is pretty good. Asian Paints, I think, very interesting. One or two of these mid-cap tech stocks are making good moves. KPIT, Cummins, and Mindtree in particular, they are strong. FMCG, of course, we mentioned those stocks. Those are doing pretty well too. So a bit of a bias towards FMCGs really, but some mid-caps here and there.
Sudeep, if I split the banking space into two, one side you've got private names, HDFC, Axis Bank, to a large extent ICICI Bank. All of them are trading at a price to book of 3 times, 3.5 times. HDFC Bank is 4 times. On the other hand, you've got BOB, State Bank of India, and Punjab National Bank. They are also large in size. They also have a good asset size. But all of them are trading at a 52-week low and are now approaching price to book of 1 time. Where do you think there is value in the near term?
Well, Nikunj, very clearly value is in ICICI Bank and Axis Bank. I will definitely not advise anybody
PSU banks, even though they are cheap?
No, definitely not. As I mentioned, Nikunj, a little bit earlier, that I don't think time for value investing has come. Markets are falling. A global situation is really alarming. Risk off is very much the mantra today. So let's not go for value investing at this stage. Look for growth. Look for solid, fundamentally strong companies.
Deepak, technically Kane today closed at 302. In quick time, Kane has cracked from levels of 350 to 300. That's a decline of what, about 15%, 16% in a matter of 10 days?
Yes, and it's also below the 200-day moving average, so long term not looking so good. Yet it had made a very solid move in the sense it didn't bottom in December, but it bottomed well before it in August. So the comparison here comes against August when it was 250 rupees. So it's a little bit higher than that, but not really delivering on the promise it was showing in February.